Welcome back to Investing Talk Podcast.
Great to be here.
Today, we're zeroing in on a company that's definitely been on many minds in the tech sector, Rigetti Computing.
Right.
We're going to look at their upcoming earnings report and really explore what you should be watching most closely.
Yeah, there's a lot to unpack there.
Our mission today is pretty straightforward. Arm you with the critical insights from the latest analysis, the reports, give you a clear picture of what to anticipate, and importantly, why it matters.
Exactly. Sort of the essential briefing before the numbers hit.
Precisely. Think of it that way. Now, before we jump into the details, if you find this kind of analysis valuable, please do hit that subscribe button.
Yeah, definitely helps us out.
Like this episode, leave us a comment. Your support, maybe even, a virtual coffee, helps us bring you more of these focused discussions.
And we love hearing from you. If there's a specific company you want us to look into, just drop it in the comments below.
Absolutely. So let's get into it. Rigetti Computing. When exactly are they reporting, and what are the general expectations? What's the street thinking?
Okay, so the date to mark down is August 12th, 2025. That's when they're scheduled to report, and it'll be after the market closes.
After the bell. Got it.
Yep. And when we look at the analyst consensus, well, the projections are pretty telling. They're forecasting revenue of about $1.87 million.
Okay, 1.87 million.
Right. And what's really significant there is that it represents a projected drop of nearly 40%, 39.3% to be precise, year over year.
Wow, that's quite a decline.
It is. It definitely sets a kind of a cautious tone. Now, for earnings per share, the EPS expectations vary slightly. Zacks has it at a loss of 6 cents per share,
Okay.
while the S&P consensus is looking at a loss of 7 cents per share.
Huh.
So tightly clustered around that negative 6 to 7 cent mark.
And any whisper number floating around?
You know, it's interesting you ask. There isn't a specific widely cited whisper number for this report.
What does that usually tell you when there isn't one?
Well, a whisper number is sort of that unofficial expectation, right? The market's gut feeling. Its absence here might suggest perhaps less intense speculative buzz compared to, say, larger, more heavily traded stocks, or maybe just less conviction on an unofficial beat or miss.
Makes sense. Okay, and has Rigetti itself given us any formal guidance for this quarter? Any hints?
Not explicitly for this specific upcoming quarter, at least not in the public filings. What we do have, though, is management's ongoing commentary.
Which has been focused on.
Continued focus on cost reduction. That's been a big theme. And pushing commercialization efforts forward, this really just aligns with what they were saying back in the first quarter.
Right, trying to tighten the belt while getting products out the door.
Exactly. It's the challenge for pretty much everyone in the quantum space right now.
Okay, so knowing what's expected is helpful, but what about their track record? How have they actually performed against expectations in recent quarters?
That's a really critical piece of the puzzle because, past performance isn't always indicative of future results, but it gives you context. Sure does. Looking at the last 4 quarters for Rigetti, it's been a bit of a mixed bag, honestly, leaning towards underperformance, especially on the revenue side.
Okay, like what?
Well, take Q1 2025. They reported an EPS loss of 8 cents. The consensus estimate was actually a loss of only 4 cents.
So double the expected loss. That's a significant miss.
A very significant miss, yeah. Then in Q4 2024, their EPS loss of 8 cents actually met the consensus. So, okay there. But revenue came in at $2.27 million, missing the $2.40 million estimate. So top line miss again?
I see a pattern emerging.
You do. Q3 2024 also saw a revenue miss. They reported $2.38 million against an estimate of $3.39 million. That's a pretty substantial miss on revenue.
Yeah, over $1 million short.
Exactly. And this pattern, this trend of underperforming on the top line and either missing EPS or just meeting it, it really goes back further into Q2 2024 and before that too.
Okay, this consistency in missing, especially on revenue, what does that signal to you, or what should listeners take away from that? Is it about forecasting challenges or something deeper?
I think it signals a couple of things. One, it highlights just how incredibly challenging commercializing quantum computing is right now. It's still very early days.
Right.
Two, it does potentially point to maybe a disconnect between the company's internal projections or hopes and what the market reality is delivering. It suggests forecasting is tough, yes, but maybe also that the path to consistent revenue is proving harder than initially anticipated.
That makes sense. So given this history, here's where it gets really interesting for potential investors or traders. How has the stock reacted after these reports? Big swings. Small bumps.
Oh, definitely big swings. You have to remember what kind of stock Rigetti is. It's a microcap.
Very small company,
Yep.
market value.
Exactly. Typically under, say, $300 million. These stocks are inherently more volatile.
Yeah.
Less analyst coverage, often lower trading volume.
So earnings news hits harder.
Precisely. So historically, we've seen major swings, think 7%, 10%, even 15% or more, up or down, following these reports depending on the surprise or miss. Yeah. Detailed intraday data can be a bit harder to come by consistently for stocks this small, but the pattern of significant post-earnings movement, it's crystal clear. You need to be prepared for that volatility.
Definitely not a stock for the faint of heart around earnings then. Looking at the bigger picture financially, beyond just the quarterly beats and misses, what are the key trends?
Well, the overarching trend on the top line, as we've discussed, is negative revenue growth year over year in recent quarters. That's the big challenge.
Still shrinking quarter after quarter compared to the year before.
Correct. Now, on the EPS front, while it's still deeply negative, they're losing money, there has been a slow, slight trend of improvement. The losses per share are getting marginally smaller over time.
Okay, so maybe some progress on efficiency, perhaps?
Perhaps, or maybe cost-cutting starting to filter through slightly.
Yeah.
But gross margin and operating income, they continue to be heavily pressured, meaning they're really struggling to make a profit from their core operations, even before other expenses. A lot of that is down to the very high research and development spending, which is necessary in this field.
Sure, you have to invest in the tech.
Absolutely.
Yeah.
But that, combined with the slow pace of actual commercial sales hitting the books, keeps those margins under pressure. It underscores the long-term, capital-intensive nature of this whole endeavor.
Got it. So thinking about this past quarter specifically, were there any major company news items, big product launches, partnerships, or any broader sector shifts that might influence this report?
You know, it's been relatively quiet on the major headline front for Rigetti this past quarter. No big splashy product launches or major new partnerships announced through the usual press channels.
So a more steady state development.
Seems that way. They've continued to communicate about, technological milestones, improvements in their quantum systems, good quality, that sort of thing. And of course, reiterating the focus on cost cutting. It suggests maybe a period of internal focus, heads down work.
And what about the broader quantum sector context?
Well, the whole sector remains highly speculative. That hasn't changed. What has shifted, perhaps, is investor focus. There's definitely more pressure now on near-term commercialization progress and cost containment.
Less patience for just R&D?
I think so. The market wants to see a clearer path to revenue, a path to profitability, even if it's still a ways off. And this is all happening in a market environment that's generally tougher for pre-revenue, deep-loss tech companies, right? Higher interest rates, less appetite for pure speculation.
Right. The funding environment isn't what it was a couple of years ago.
Definitely not.
Okay. And quickly on analyst coverage, any changes there? Upgrades, downgrades?
Coverage remains pretty sparse, actually. And no, there haven't been any significant upgrades, downgrades, or major shifts in consensus price targets reported right before these earnings.
Which, as you said, can sometimes mean surprises hit harder.
It can, yeah. Fewer eyes closely modeling every detail means new information can have a bigger impact when it lands.
Okay, let's switch gears then to the technical side. How has the stock actually been trading leading up to this report? And what's the market implying about potential moves?
Sure. So the shares last closed at $16.47. Interestingly, they had a bit of an uptick on the most recent day, up about 4.5%.
Oh, interesting. Some pre-earnings optimism, maybe? Or just market noise?
Could be either. Maybe some speculative buying, hoping for a surprise after the recent weakness, or just typical pre-earnings volatility. Hard to say definitively.
And key price levels to watch. Support, resistance.
Yeah, looking at the chart, near-term support seems to be around $15.50. That was a recent swing low. Longer term, if things really break down, you might look towards $13 as a more significant support level.
Okay. And on the upside?
On the resistance side, $17.20 is the recent high they'd need to clear to show some positive momentum. And then if things really took off, the next sort of material resistance level looks to be around the $20 mark.
Right. So putting that together with historical volatility, what's the implied move? How much wiggle room is the market pricing in?
Well, while we don't have the specific options market implied move data right here, we can look at the history. As we said, earnings moves for Rigetti have commonly been in that plus or minus 10% to 25% range.
That's a huge range.
It is. It tells you the market expects a significant reaction. Implied volatility in the options market is almost certainly elevated heading into this report. The market is basically saying, Hold on to your hats. This could go either way, and probably by a fair bit.
Okay, so brace for impact. With all this background, the forecasts, the history, the sector, the technicals, let's talk scenarios. What's the best case outcome for Rigetti here, and what's the worst?
All right, the bullish case. For things to look really good, Rigetti would need to deliver a clear beat on either revenue or EPS, or ideally both, against these already lowered expectations.
Just beating the numbers isn't enough, though, right?
Probably not, given the context. It really needs to be coupled with some tangible, forward-looking good news. Think. Announcing a new substantial partnership, demonstrating clear progress on commercialization, maybe naming specific customer wins or significant contract advancements, or offering improved cash guidance showing they have a longer runway than feared.
Signs of real business momentum, essentially.
Exactly. Signs of narrowing losses, faster customer acquisition, a growing backlog, anything like that would be very supportive and could really spark a rally.
And the flip side, the bearish scenario.
Well, given the history, this is unfortunately a very plausible scenario. Any further deterioration in revenue, just meeting expectations but offering flat guidance with no clear signs of improvement.
More of the same, basically.
Pretty much a lack of progress on the customer or partner front. Or, perhaps worst of all, signs of increased cash burn, meaning they're spending money even faster. Any of those could fuel a pretty sharp sell-off.
Especially given that track record of misses.
Precisely. Investors might just lose patience if it feels like the story isn't improving. How much longer can they burn cash without showing that commercial traction? That's the key question hanging over them.
It really is. So, if you had to boil it down for listeners, what's the single most important metric, or maybe two, to watch when this report drops?
If I had to pick just one or two, it's got to be net cash burn and the remaining cash runway.
How fast are they spending, and how long can they keep going?
Exactly. In this market environment, for a company like Rigetti, that's paramount. Beyond that, any specific disclosure of new commercial contracts or actual revenue coming from partnerships, those are the proof points the market is desperately looking for.
Cash is king, and contracts are confirmation.
You got it. Without those, the financial runway just becomes the dominant concern.
Okay, so bringing it all together then, what's your overall lean heading into these earnings? Bullish, bearish, neutral? And what kind of strategies might investors consider depending on how much risk they're comfortable with?
Overall, my leaning here is probably neutral to slightly bearish.
Okay, why bearish?
Primarily because of that consistent historical underperformance, especially on revenue, plus the ongoing negative revenue growth trend and just the generally cautious, even fragile sentiment around the whole quantum sector right now, unless you show real progress.
So your confidence in a positive surprise is
Pretty low, honestly. Maybe a 3 out of 10. The recent trends just suggest management keeps facing major hurdles in execution, and the market's appetite for unprofitable tech, especially hardware, without concrete top-line proof. It's just very thin right now.
and the volatility adds to the risk.
Yeah, absolutely. The high implied volatility, those wide historical misses, it all reinforces the risk of another disappointment.
So strategies. What about someone who's risk averse?
For risk-averse investors, the advice is pretty straightforward. Probably best to avoid holding shares through the earnings event. The potential downside swing is just too significant given the track record and volatility. Sit this one out and see what happens.
Makes sense. And for someone more tolerant of risk, someone who understands the speculative nature here.
Well, for risk-tolerant investors, you could look at option strategies designed to profit from volatility itself, like earning straddles or strangles. These bet on a large move, but don't necessarily pick a direction.
But you need to structure those carefully.
Oh, absolutely. Define maximum risk is key. You have to anticipate a sizable move up or down. Now, if you do have a directional bias, well, given the negative trends and the cautious backdrop,
A bearish bet.
a small speculative short position, or perhaps buying put options or put spread, could align with those prevailing risk factors. But, and this is crucial, only with very strict position sizing and stop-loss management. This is highly speculative territory.
Understood. Strict risk management is paramount. Okay, that's incredibly helpful, laying out the scenarios and strategies. As we wrap up, maybe a final thought for our listeners to consider regarding Rigetti.
Yeah, perhaps think about this as you watch the report. Beyond the immediate numbers, the EPS, the revenue, what truly matters here is the narrative. Can a company like Rigetti, deep in the quantum development phase, burning cash, can they shift investor perception with a single, maybe unexpected breakthrough, a big commercial win?
Or does the market need more?
Or does the market, especially this market, demand more sustained, consistent evidence of commercial viability before it really commits capital to such a speculative long-term frontier? It's that narrative versus sustained execution question.
That's a great thought to leave everyone with, the immediate reaction versus the long-term story. We hope this breakdown has helped you feel more informed and prepared for Rigetti Computing's upcoming report.
Hopefully, yeah.
Thank you so much for tuning in to Investing Talk podcast. We'll be back soon with another detailed exploration into the world of finance.